Welcome to the Bear, the Bull, and the Ugly podcast with Stephen Kalajian, your no-nonsense guide to the markets. Whether you're watching us live on YouTube at TradeEZ or listening to your favorite podcast platform, we've got you covered. Subscribe, join the community, and get ready to dive into real talk and real market insights. Let's get started.
Hey, good afternoon, everybody. I'm Stephen Kalajian, and welcome to the Bull, the Bear, and the Ugly. Well, today, wow, what a day. The Bull was out and running over everybody, right? You could see this market did not want to go down. Yesterday, the CPI number came in hotter than expected. Today, the PPI number came in hotter than expected, showing signs of inflation, but the market does not care. They think interest rates are going to come soaring down here in the second half. And you know what? You just got to just trade what you see. And most people who are now seeing this, okay, are realizing that the 30-year bond market today, the prices went up, yields went down on the 10-year. And more importantly, people are still talking about the inflation, eggs still being high. That's because of the bird flu. But overall, the markets are just shrugging off any signs of weakness here based upon normally when you get a hot and expected CPI and PPI back to back, normally you'll see the markets get hit 2 days in a row here. And you know what? We didn't see it. Today, I'm going to show you some really great moves here, monster moves here. You can follow me on X. I posted them. And you can see this morning, and I'm going to show it to you. But more importantly, you know, I've been doing this now 41 years. And you know what I say to people? You trade what you see. That's the most important thing. You keep your opinions out the door, okay? You want to trade each and every day. You trade what you see. And that, to me, is the most compelling words I can tell anybody who wants to trade. Trade what you see. Don't let the math, let the patterns, let the strategies that I've taught people all around the world and to some of the top hedge fund managers, trade what you see. So today, most important was when the big time frame, the 30-minute, one of the biggest time frames, the 30-minute, remember I told you the 15 to 30 and the 60-minute time frames are the way I look at the market for intraday trading. Well, at roughly 10 a.m., the spiders, the SPY, and the RW, the spiders and the QQQs reversed to buy on the 30-minute time frame. And I'm going to show you this right now. Watch this, okay? So we came in today knowing that the spiders, the SPY, I was bullish, okay, on the 30-minute, on the 30-minute and the 15-minute time frame. But when the 60-minute time frame reversed to buy right here, it was a 60-minute at 11:30, okay? And there's two different strategies here. And the first one is the spiders. The 60-minute time frame correlated with the 30-minute time frame using my indicator 4, and it also correlated with the 15-minute time frame. And I posted on X that look for the first pullback between 12 and 2 o'clock on the 15-minute time frame, and we got that, and I'll show you that in a second. So this strategy was when the 60-minute time frame correlated with the 30, and it also correlated with the 15-minute time frame right here. All right, right here, beautiful, a complete Picasso. Watch this now. All right, now I'm going to change the symbol. Okay, I'm going to change the symbol here to Coinbase. To the Qs here, okay? You can see here now in this strategy, the 30-minute time frame right here correlated with the 60, right? And exactly at noon, we got a nice pullback on the 15-minute time frame, but this was the most unbelievable pattern today. The 30-minute time frame getting deeply oversold, okay, into the positive MACD, right into the 10 bar. You can see what happened They went 1, 2, 3, 4, 5, 6 new highs on the day. S&P futures were trading at the 60.88, and they rallied 47, actually 50 handles, because the high was 38 here. 50 handles on the 50 points on the S&P, and on the Nasdaq they ran 200. They ran 200 on the Nasdaq. Okay, a monster pattern here. And so today, this was the tale of the day. And if you look at Coinbase, another stock reversing to buy, the 60-minute time frame, beautiful positive MACD, rising ADX, MACD positive. Look at this beautiful pullback in Coinbase. It actually started right around here, around the 286, 287. You could have got under 288. And look what Coinbase rallied all the way up to 302, rallied 14 points off a 30-minute time frame. These are monster patterns. Everything I teach in my live stream each and every day is based upon combination methodologies, being able to look at the 15 to 30 and the hourly time frames. Also, we had monster moves in HOOD. We had APP traded up to like 525 and then dropped all the way from 525 down to 449. Monster moves in these names after the earnings. Today we have, after the bell here, we have Coinbase, TWLO, PANW, AMAT, and Roku. But again, this is what we do here each and every day with my 41 years of experience. Like I said, I've traded nearly 2 billion shares in my life, and people who I work with, some of the top hedge fund managers. I hold a live stream each and every day. You can give me a call anytime, 914-500-7484. I'd love to hear from you. Also, another great stock today, AUR. Look at this monster move in this stock. Look at this stock, AUR. It was up 41%. So when you see the 60-minute time frame reversing to buy, and you can see, look at this big buying pressure. MACD is positive. Look at this. And then you got the big, nice, beautiful pullback right here under 860. Look at this move from 860 all the way up to 849. These are monster moves here. Monster moves. I'm going to show you Meta. One of the people on my live stream said to me, my God, Meta ran $7, $8 today, right? And you know what? It's really important to understand the strategy. You can see the 60-minute time frame. I'm bullish on my 60. I'm bullish on my 30-minute time frame. And if you look here, you can see right here, again, the 30-minute time frame. Everything lined up at that 130 time frame, 130. Everything lined up. Look what Meta did. Meta went from 218.04, rallied 10. Now, my trades normally last anywhere from 1 to 8 bars. So if you're looking at a 30-minute time frame, 1, 2, 3, 4, 5, and 6, within my 8 bars, Meta ran 10. But here's the strategy on this one. When Meta reversed to sell on the 15-minute time frame right here, the algorithm reversed to sell on the 15, meaning that now the 30-minute and the 60-minute time frames are in buy mode, and you have what's called a disconnect. So you can have a buy divergence and a disconnect. Remember my 5 conditions: a trend, a buy reversal, sell reversal, a correlation, and the disconnect. And you have 5 conditions and you have 10 strategies. Okay. So with that, the trades here, remarkable, unbelievable trades here in the spiders, in the Qs, in the Russell. Let me show you another great pattern here. I'm going to go back to Coinbase really quickly here. Coinbase, after it's set up beautifully here on the 30, on the 60-minute time frame, and on the 15 on the deep oversold, and the 30, when I got my buy reversal on Coinbase right here on the 15, that now correlated to the 30 and the 60-minute time frame. Let me just put this up here like this. This is a beautiful long. Then I switched to looking at a smaller time frame because I leave these charts up all the time. So this Coinbase, when it got the big buy reversal right here at around 2 o'clock, and it correlated with its 30 and 60 minute. Had a beautiful short up here, caught the pullback, and I did not take this long because it was getting over. It was with 20 minutes to go in the day. But this is, if this was normal, we had enough time, like an hour before the close. This was a beautiful pattern. This is the first pullback on the 5-minute time frame after the 15-minute time frame correlated with the 30 and the 60-minute time frame. These patterns repeat themselves each and every day. I spent nearly 10 years of my life building this software. I've given it and shown some of the top hedge fund managers in the world, whether you're trading index futures, whether you're trading the ETFs, it doesn't make a difference to me. If you look here at the spiders, you can see that the spiders on the smaller time frame got a big buy reversal here on the 5-minute. And that 5-minute buy right there correlated with the 15, the 30, and the hourly, and up and away. When you get something like that, you have to resort to using the smaller time frames, like the 3-minute, because now you're in a monster trend here. You can start fading them, looking for pullbacks, looking for short scalps, but a little bit dangerous. But again, ultimately, you're going to get a pullback, which we got at the end of the day. I caught this really nice long here, and you can see they rallied about 90 cents at the end of the day. You know, when people talk to me, when people ask me all day long about trading, you know, the day flies here. Boom, flies, boom, right? Because there's, you know, there's a big opportunities on the opening from 9:30. You know, people say to me, what's the best hours of the day? I say from 9:30 to like 11:30, 12, maybe 12:30. Then there's a lull, and then 2:30 to 4, it kicks right back in again. So we had a monster move here in gold, monster moves here in gold. Gold making new highs here during the sessions, but on the overnight, I believe the high was 29.68. Gold's just itching to go to 3,000. But here's the thing, though. The GLDs are so overextended here. I'm going to show you this. I'm going to show you the GLDs on the daily time frame. Well, right now we're 90 points away. So that means that gold, I'm looking for gold to really kind of pull into the 28.60 level. You got all these gaps below the market. The prices right now from the 10-bar moving average, 9.7, so like 97 points away, right, from the 10-bar weighted moving average. And when the algorithm right here, 261, is higher than the moving average, the rule of thumb is to get a very sharp pullback here. All right. There's names like DUST, D-U-S-T here that are just really, I'd be looking to take a position with this between the 40.5 and the 43.5 for a trade back up to 50. Because again, I'm looking for gold to get a decent pullback here. If you look at the SPY, I said a couple weeks ago, I'm looking for a new all-time high on the spiders on this move. And then I'm looking for, if you see here, the all-time high was 609. Let's see here. Right here was 610.78. We're 10 points away. So I'm looking to see if we can make a new high here now and get overbought. Now we're 18 points away here from the moving average and the negative MACDs here. The higher they go, I'm looking for this move to be exhausted within the next 3 to 5 to 3 to 8 days to the upside. And then what I'm looking for is a pretty sharp decline into the first to second, mid to March, or for a couple of weeks of March. And then from there, then I'm looking for another push up. Again, ultimately, my target 6,500. I stated this back in August of last year. I don't think anybody was coming close to that number. I think I was the first one that mentioned that number and that target. All right, when we come back, don't miss this. I want to tell you what to expect for tomorrow. I'll see you here in a minute. Okay, so tomorrow at 8:30, we have another number. 3 days in a row, we have CPI, PPI, and tomorrow 8:30 is retail sales. Now, of all the 8 big numbers, retail sales probably, you know, employment's a big one, CPI is a big one, PPI is a big one, but retail sales can have a really big catalyst to the market either way. If retail sales are super strong, that means the economy's strong and good night cutting interest rates. If the retail sales numbers are a little bit weaker or weaker than expected or come in very, very light, then it's signs of like back in the old days because I'm here 41 years, well, like a recession, the consumers aren't spending, and that means an economic slowdown's on the horizon, right? So it's a funny one. It doesn't, I mean, of all the big ones that I look at, like I said, employment, PPI, CPI, durable goods, GDP, I would say that retail sales is like the 6th or 7th one, but still it can have a meaningful move here in the market. Now, based upon what I'm seeing here for tomorrow, we're very overbought here on both the 30 and 60-minute time frame. So I'm looking for some type of a pullback here. Again, I'm still looking for the S&Ps, the overall market, to make a new all-time high. Maybe get above that 6180 on the S&P, 6200, 6220, and then I say let them have them, because I'm looking for a nice pullback here into mid-March and set up another great long opportunity. Also, look at the names like HOOD, Hood, reported great earnings. Look at a stock, Upstart, Costco, Crocs, CROX. These names, when they pull in the next anywhere from 5 to 8 business days, are going to set up, in my opinion, very, very good pullbacks here. Okay, and some great long patterns. So again, what's important is to understand that this is pure technical analysis, and that the analysis that we look at, there's zero fundamentals in it. I do not like to trade into earnings. I think there's so much opportunity to trade after the earnings, right? So if I show you a stock like IBM, really great pattern after the earnings. I'll show you this. This was exactly what I say why these names are important. IBM, right? We were looking to short this around the 265 level. Look at the high, 265.62. I didn't say it in it for the whole drop down to below 247, but you can see the drop here from 265 to 247. That's a $18 drop. And then you buy the first pullback on the daily right here on the indicator 3, my oversold oscillator, and you can see what IBM did. And just in 4 days, went from below 47, ran 12, dropped 18, ran 12. Really. So that's what I'm expecting in names like this here, Hood. Look at this, another name, okay, pushed up, boom, okay. So I'm expecting a nice pullback here eventually in the next, 5 to 7 days. Look at Costco, another great name here. These names very, very overextended here. So I'll be looking for pullbacks here. Upstart, UPST, which reported yesterday. See, look at this. Yesterday, the high was 90.44, and now look at this. Okay, so it should be setting up here on a pullback. Names today that are going to be reporting: Coinbase. Let's see if they came out. Twilio. If Twilio came out here, down 7. Looks like the earnings came out. PANW. Let's see what to expect here for tomorrow. PANW. Okay, I think they might have come out. AMAT, another great name coming out. AMAT down 2, and then Roku. So it looks like these earnings might have come out already. Oh, wow, there's Roku. Look at Roku for tomorrow. So Roku is going to be a name that we're going to look to buy the pullback here on tomorrow on the 15-minute time frame. So here's a good name for tomorrow. I'll be trading Roku up to yin yang, and so that's going to be a name I'll be looking to buy on any type of pullbacks for tomorrow. All right. So again, way overbought here. I'm expecting if we do get any type of push up tomorrow after the retail sales, I would look to fade the market, and then I'd be looking to buy a decent pullback, maybe on the 30 or 60-minute time frame again. But here's the name, Roku. If it stays up like this up 15, 13, 14, 15, I'd be looking to buy Roku tomorrow on the first pullback on the 15-minute time frame using my software. All right. Coinbase looks like it's up about 4 points after hours right now, and we'll wait for better patterns on Roku, on Coinbase, most likely off the 15, off the 30 and 60-minute time frames. All right. When we come back, I want to tell you a story that happened to me today that made me cringe, but I want to share with all of you. I'll see you back here in a minute. All right, so every single day it's just a learning experience, and I hear some of the same stories from people all the time. And, there are many different types of traders. There's scalp traders, there's day traders like myself, but I do both scalp and day trading. You get also intermediate term trading and long term. Not really a long term person, but, but I've done it in the past and I have a belief in something. Like when COVID happened or big aberrations in the market, like October of 23, when the S&Ps were nearing the 4,100 mark, 41.25, and I just said we were deeply, deeply oversold, and the markets just never looked back. Boom, right? And so, but today it hit me, when you're trading the market, right? You really have to have the most unbelievable amount of discipline, right? And so when you're trading and let's say you're short and it's the S&P futures, you're short and now it drops. Actually, it happened twice today. One individual then another. You're short something, right? At a price and it drops, and based upon the way I trade, you cover some of the position and then you lower your stop. If you're short something at 25 and now it drops down to like 20 or 21, you cover some, you lock in some of the profit and you lower your stop to like 24, or you leave it at like 25 or whatever. And if it drops again, you look to cover some and just keep playing that game and parlaying it all the way down. But in this case, let's say you're short at 25 and now it drops to 21 and you don't cover, and now you trade up to like 30, and then like, what are you doing, right? So scaling into a position, but also knowing when to take the money off the table, but more so being able to lower your stop. I make people laugh all the time. I say, if you're trading hand on the mouse, meaning, right, when you're putting your orders in, hand on the mouse. The other story I heard today was in a position, right? Someone was long at a price at 58 and it went to 61. So almost 62, 61.92, I think 61.98. So it rallied almost $3.90 points from when the person was long. So it rallied $3.90 points, $3.90, sorry. And then instead of selling some of the position, boom, it drops all the way down to 49. So it's trading at like 458. It traded up to 461.97, and then it dropped all the way down to 449. So I'm shaking my head. I'm like, how are you not selling some, and then how are you not, raising your stop to like at least 59 or 59 and a half, and then protection? But no, watch it all go all the way down, and then sold it for a loss. So I'm like, for me, this is not that hard, but to most of you, the reason why people fail is because of lack of discipline. And, I have stories. I'm telling you, I've been doing this over 41 years. August 1st will be 42 years in the industry. I could write a book bigger than War and Peace. And all I'm trying to do with whatever life I have left is to be able to be the best educator, guidance, a mentor to all of you, to be able to teach you everything that is within me to make you all super successful and be consistent, because my legacy depends on your success. So again, I hope these stories that I share with you, and trust me, I have many more, will be able to resonate with you, to listen, and to be able that you can see what I'm saying and being able to apply it in your trading, whether you're scalp trading, day trading, intermediate term trading, and long term. Oh, one last story. Someone told me today, this is the third one, was in this crazy stock, APP. The stock gapped up, opened at 499, traded right up to 525. I was looking for shorts up there, dropped from 525 all the way down to 449. Wild day in that stock, right? I said, person called me in the middle. It was kind of slow during the time, so I answered the phone. I said, what's going on? He said, oh man, I got hurt in this one stock. And I said, really? You got to apply stops? He goes, yeah, I know. There's nothing worse in the world than anyone telling me I know. If you know, then do it. Okay? If you know, then do it. All right. Thanks for joining me, everybody. Tomorrow, 8:30 retail sales tomorrow. Thank you for listening to me on the Bull, the Bear, and the Ugly. And today, the Bull was running wild. Have a great night, everybody.
Thanks for tuning in to the Bear, the Bull, and the Ugly podcast with Stephen Kalajian, your no-nonsense guide to the markets. If you enjoyed today's episode, be sure to subscribe on YouTube at Trade Easy or on your favorite podcast platform. We'd love for you to rate, review, and join our community for more real talk and market insights. Until next time, keep trading and stay sharp.